Good morning. Let's get some charts up here. Markets were kind of wild overnight. Fast moves up and down and are resolving themselves to the upside, following through on yesterday's gap up and go. Looking at the QETF here today, and you can see it moving up toward 315 and gapping above this high. We'll see if it's still there in 20 minutes or so. And it's got room to go higher up to this resistance level. There's some over here, which is coming right into. We'll see how it reacts to that. So the bullishness continuing to follow through, and the Qs have the best setup to do that, which opens the question, can they do it by themselves? How far can the S&Ps get? Looking at the spiders, which are kind of all over the place there, they hit the resistance level. And, so it makes sense that they've backed off. Coming back up here, you could see 389, so coming back up toward yesterday's high and right back into this mess of resistance overhead. So as far as longs goes, it's going to continue to be what has been underperformed, playing catch up. The NASDAQ, tech, things that were beaten down. And what's over here might make some headway, but less desirable trading opportunities with charts like this versus what we have in the Qs. It's moving up, as it gets up to what we call the destination, where the stiff resistance is, probability is that it's going to stall. Okay, let's take a look at the futures. We'll get to SPX. And so you can see the S&Ps here is coming up to the top of yesterday's range. And so in part, you're saying, well, can it get through it this time? And it's always the question as we come up into an area of resistance. And so yesterday, prices fell from there. And so it's been tested once. Unfortunately, the next step is, directly up above, not far away. I mean, intraday, that could be a nice move. But as far as swing trading goes, you just look to the left and say, well, the next stop is right there. And you can see all the other pivots to the left. But these have been tested once, right? It just came up into this level. It fell hard. So while this is in the same area, it's not as if prices haven't been here before. Obviously, they have. That being said, because it's been tested once, it's a little bit of a benefit, but you still got a pretty big wild mess of stuff flipping back and forth here. So this area was tested once. That's good. Now you can see it coming up here pre-market up to the 3,900 level. There's going to be sellers there again. How it came up, you could see on the 15-minute chart, it's going up there vertically. So as it comes up into here, you can be sure there's going to be sellers, and it may just take the high out for good measure, meaning to hit some stops, and that's where it'll probably start to pull back, and we'll really get a better insight as to its ability to hold up in this area here during the trading day, which would open up our bias to think, hey, this can continue to go higher. In any event, we're not really attracted to patterns like this that have such a stiff area of resistance to deal with when we have a choice of picking other things that have been beaten down and have voids above. And YM. This type of price action is expected, meaning a greater than 100% retracement. It came in yesterday. It's been the underperformer. It's going sideways up there. And We'll see if it gets through it. I mean, the best thing I think for this pattern would be an inside day that closes well, meaning something like this or better. And because it traded under the low, we've got a continuation type of a pattern um, to push higher. And of course, you know, the bottom of that is, if it doesn't hold here, well, you got another level here, but um, once it comes down and breaks like this and recovers, the ideal scenario is for it to hold on to that gain and go sideways. Let's go to SPX before I continue with the others. So come back here. So spiders are up at 390, right up at the resistance here. So they're going to be opening up at that level. And so SPX is going to pretty much be doing the same thing. Opening up here, you've got all of this resistance. And so I think, 39.30 should work today. And so as this comes up, it's going to open up here, and there's going to be sellers. The fly in the ointment, so to speak, or the analysis is the void in the NQs. But it's based on the strikes and the open interest. And, this did come from here. Yeah, it did back off in the gap up, and now it's opening up in this area. 39.30 is above this level. And so last I looked, it was like $1 by $1.25. Let's see what it is now. 9. It's popping. That's with the market going up. You could probably go up to 39.40. $1.05 by $1.25. So, you assess it, you see how far away you can get, but there's decent resistance here. It's opening up to 39.40. And, the higher you go, the less premium there's going to be. Futures are still pushing. So at the open, if they start to gap and crap, just pick a level that you're comfortable with. 39.40, $1 by $1.20 now. Look at Friday. $39.95. Well, you think the market's going to rip higher here? $39.95. 2 days. Friday. Let me look. Calls. Yeah. Yeah. So for those on YouTube, like Glenn always asks me about this. If you look at Friday, it's 2 days. You can go up to $39.95. It's 95 cents by $1.05. And you've got 4,000, that giant whole number up there with a huge open interest. So the probability of getting through is, pretty darn slim. So that's a good idea. All right. So on the downside, which probably want to wait to see if it actually does gap up and start coming in pretty good. But 38.15 was probably less than what it was before, but 38.15 below 38.20. Below day before yesterday's low, the down bar, it was premium. So you can look at that. And that's interesting. Maybe it's just the way my thing is set up. It's two standard deviations of 2.5 deviations away from the at the money, and those 3,700 strikes went away. I have to adjust that. So 37.25 for Friday. Yeah, I think it sounds like a no-brainer. Way down here, sure. All right, let's look at the other markets. So again, this has room to continue higher. You can see the void right there. We adjust up toward resistance, and of course it shouldn't come back there. Pullbacks toward that area should be buyable. 13,000. There's nothing to the left, but that'll be a focus number. Ultimately, the converging 20 and 50 into these overlapping bars is where this stiff resistance is going to be. Internal, someone's asking me about. So I explained earlier in the week that we had gotten the buy setup that I certainly wasn't all that comfortable with, because I haven't never seen one with the bands up this high. But that was the idea of creating them. And so it only touched the first one, but it touched it, and breadth was down at the bullish level. So I mean, it's still here, which is a positive. So you can see the day-to-day closes. The fact that the market is going up or has gone up, and the option traders have leaned more toward the put side, that's a good thing. And if they would immediately had jumped back to the calls, that makes it historically more skeptical that it can continue. In any event, S&Ps are up at this resistance area, but the fact that they are leaning toward the more bearish side is supportive of a thought that, hey, maybe this is just chop sideways and absorb that resistance and be able to get through it. But the schizo market's a little uncertain moment to moment. I mean, last night, if you look at the price action, it was like all over the place. Bottoming, come up, nosedive all the way down, back up again, and then here we are this morning. Russell coming up into resistance again. It was the leader, right back up here. Nasdaq stocks still have room before they reach resistance. Bonds are stabilizing at that support level, and let's look to the left. They come right down here. They're going to start to stabilize, and probably eventually, I think maybe by next week, try and rally back up here. And oil, pulling back, but it's at its destination. So even though it's still strong, it's likely that it's going to start chopping sideways, or some kind of buy setup failure. Probabilities increase. Gold, trying to make the turn. Look to the left. There it is. I'd like to see a little bit more, maybe next week, or a nibble here. And gold is probably flipped from silver being the most attractive of the two, where it's failed, and now it's the way it's come down, and gold, having come down so much further and faster, has a bigger void. So as a counter trend trade, this is more attractive now than silver, where silver before was showing relative strength, and it looked like it was going to explode higher, and of course it didn't, and people hit the bid. And see the transports, jiggling around after going up there, the sell day and inside day. So uptrend, give it the benefit of the doubt that it go higher, especially with a potent reversal like that. And well, keeping an eye on this is the euro versus the dollar. It's been going down, so the dollar's been finding some strength and going up, but it's beginning to make a little turn here. So that actually could be an additional plus for the equity markets. The dollar begins to back off a little bit. All yours, Dan.
All right, good morning. Yeah, you weren't kidding with that overnight action. Wow. I guess they like this 8:30 CPI number or whatever the heck it was. Commentators are just giving an explanation of, well, they liked it because then that's not going to be as big a problem for yields, I guess is the story they're saying. Although yields are, it looks like it hasn't changed a penny or just from the close of time. So who knows? That's the media just putting things in your head again. But we have 10 open bull put credit spreads in the weekly options trader. No, but Anthony, that has nothing, absolutely nothing to, well, that has nothing to do with the pre-market reversal being down so much and rallying right at that 8:30 number. Yeah, we know that they were going to vote on that today. All right, so we had a number of these go against us, like Google and Netflix, but now it's gapping over yesterday's high. We should be home free now in all these. We have actually two Qs positions. That's Netflix, but we put on a second one yesterday with this potent reversal. So both of those look good. All the opens look fine. So just ask me if you have any questions. Otherwise, I'll go right to some gapping ideas. EXPR. Yeah, I posted that pre-market SAM to our advisory letter, and I have it right here in this middle thumbnail on the right. It's a gap over a 1, 2, 3 with a price void. I mentioned to Greg pre-market this KOSS, big gap up, and this is totally one of the Wall Street boy toys back here. And to me, it just looks like they decided to put it in focus again. And the chart supports a big move, though. It went up, it's curled here at the 20 and 50. So, yeah, let's keep an eye on that today. GME, they've been playing with the last couple of days, gapping up again. Even remember the old suspects? BlackBerry was one of their toys back here. So it looks like the Reddit boys are pulling out some of their old favorites here. AMC gapping up here, 50 cents. We'll keep an eye on these. No, McGraw, you're telling me it is, or you're asking me? I'm just, yeah, well, I'm saying this is the footprint of it. I don't go to that site, so unless one of you all confirm it for me, I'm just speculating when I say it looks like a Reddit toy. And I call toy, what it is. It's just making these things little video machine toys, and then they're playing with them. I mean, good for them. I don't care. Rocket Arcade Team. Yeah, this was a toy of theirs absolutely the other day. Over yesterday's high, as of right now, you got two topping tails there. Diego, AMD, and Facebook. AMD, it looks higher. It's one of these potent turns with a price void. MU is stronger though, because look at the 20 and the 50. And that's also made a bullish turn. So I posted this as a put spread, but I also think let's watch this for directional. Directional, this looks great because it's in an uptrend. In fact, let me go ahead and post that in our Telegram. But with the mark, with the Q's up so much here, yeah, I'm kind of concerned with a gap and crap too short term. But this is a great candidate. Facebook. Yeah, we were talking about that yesterday. I have never seen such crazy up, down, up, down, up, down, up, down, up, down. That makes you dizzy. But yesterday it broke out, so it's a watch for day trade long and put spread. Sure. BSX. Looks I see one print down here gapping down, but over yesterday's high is fine, or a little bit more aggressive over 40 bucks. That's fine. A it's the bull consolidation. It has room. It has room. I'll keep an eye on it with you. Yeah, Tilray I saw moving pre-market here. Um, they're not no-brainer patterns. But I was telling Debbie and Gustavo yesterday, if buy 20%, just because it's lower lows, lower highs. I don't know if it's gonna hold here. I don't know. So when you don't know, you just start put your toe in the water. I don't get RBLX, Anthony. KR. You think it's likely to revisit its late January highs? The answer is no time soon, Steve. When something falls like this, you'll be lucky you get half. No, that's going to take a long time to heal, is what the chart suggests. Uh, CVM. This is one Gustavo gave me. He said it's a biotech, but he says that um, he says he likes the fundamentals of it, cancer kind of thing. If it can get over Monday's high, that's like not bad. MGI gapping up 781. I'll keep an eye on it. There's that EXPR one you mentioned, cost we mentioned, MNOV 1019, gaps too big. Probably a bio. Slug we were looking at the last couple days. Gapping up 590. Right to right to this gap resistance. But 30-minute high could be an idea. That's one of the betting stocks. So I don't know if it's in BETZ or not. See, I looked at yesterday. I looked at the gap, and then I said there's no price void. And so here's an example of why you got to come back to them. Had I seen this after 30 minutes, look, here was yesterday. 30 minutes went sideways. Look, that is a beautiful afternoon breakout, right at 2:30 reversal. That I would have bought, but I wasn't watching it because I was going through in the morning pruning things. So there's one that slipped away from me. But if we could have got a 1, 2, 3, I would have liked it. But it's gapping up again. X, yeah, I mentioned this yesterday. X has a wide range bar from here. So it's in a downtrend, gapping up. Gap's too big. I mean, just do it in your head. $3 divided by 13 is a huge gap. Gap and a resistance. It's up now. It's up 40% since last Friday's low. Zoom, I gave as a put spread idea for Friday. The same kind of, we're getting a lot of these, just nice 2-bar reversals with a price void. Piton is another one on my list. Not as clean because it went sideways and broke down. But let's keep an eye on this, see if we can get a Friday put spread. I do. Gapping up. Bullish 15, maybe 30-minute high. Yeah, we looked at BSX already. Tesla, Daniel, you got to tell me what you're thinking, because look to the left. You got 5 overlapping bars there. It's run $150 in 2-3 days. So there's just no setup for me right now. Thomas BSX. Yeah, I already talked about this one. Um, Thomas, I said over yesterday's high, or more aggressive is over $40. It'll be over these two 15-minute pivots. Would be fine. Carl, if I'm not sure what you're thinking. It's another one of these turns, and it does have a price void. So maybe 30-minute high is a day trade. Not crazy about that as a swing setup.